Many physicians come to me and they want to embark in real estate investing. And what I find more often than not is that the information that they have acquired from their research to invest in real estate is all wrong. Coming from a tax strategist, there's a certain way that you should embark in real estate in order to get the benefit now and maximum return later. I made this video to help you out a little bit. Yes, our physicians could be highly successful all on your own. You don't need me for success. You've proven that you can be successful. You're generating a great deal of income. You're living a life that many people only dream of. What my physicians hire me for is to make sure that you're 100% optimum. And the way we do that is we run the numbers and we consider all of the variables. So therefore, that investment that looked good, once you consider all these other variables, that investment may not look as good as you thought. And maybe there's another way to do it where you get a bigger bang for your buck. We have lots of scenarios where we assisted many of our physicians in developing real estate portfolios. So some physicians come to us, they may have 2 or 3 doors that they're working with, that they're generating revenue on, and they want 100 doors before they hang up the white coat. Well, we position them in such a way in order to do that. But it's all customized. It's not just one size fit all. You do what this guy did, or you do what this lady did, or you do what this physician's done. You have to figure out what is the best way for you to be able to get into the real estate industry. So many of our physicians come to us and they have an interest in building a real estate portfolio in order to accomplish passive income. But most of the physicians that come to us not having the entire story. So they may have talked to a guru or spoke to someone, or you may have spoke to many individuals that have a great deal of success in real estate. And they don't technically give you the whole story. They say that if you invest in real estate, you'll be able to save more on your taxes. Well, it is true that if you're making real estate income, that you shouldn't be paying taxes on that revenue, because there's just so many ways to minimize your passive income in order not to pay taxes. But it does nothing for your active income. Or let's say you have a high W-2, or you have active income coming in that's over $400,000 or so, or higher. Well, a net operating loss coming from your real estate ventures will not offset that income. And so then now that you get there, now you want to say, okay, well, how do I do it? Well, you have the short-term rental strategy. Many physicians are looking into the short-term rental strategy where you have less qualifications to become a real estate professional managing your short-term rental. Or the long-term rental strategy where you want to have either spouse or specialize as a real estate professional in order for you to take those net operating losses from your real estate ventures, which you can do very easily on paper, and then have that cancel out or go against your already high active income. However, when you go into real estate, there are many things that you have to consider. Number one, a lot of individuals, and perhaps even yourself, might have what we consider barriers to entry. Now, barriers to entry could be various different things, and there's no one barrier that is for everyone. A barrier to entry may be time. Well, I work around the clock, Shawn, and I don't have a lot of time to invest in real estate. So that could be a barrier to entry. Shawn, I got a lot of debt and I don't have the resources, I don't have the down payment, or I don't have the down payment to purchase real estate. Well, that could be your barrier to entry. It could be market area. Well, I live in this area, real estate prices are so expensive in this area, and I don't want to be an absentee owner. Well, that's a barrier to entry. It could be credit. A person might say my debt to income ratio is too high and I don't have what it takes in order to embark into real estate. Or it could just simply be simple know-how. Shawn, I don't know how. I don't know what to do. Based on your barrier to entry is where you have to start. What are the difficulties I might have in embarking into this real estate area? Then you look at, so what is my entry point? So your entry point could be various different things. It could be, well, I want to start off slow. I want to set up the structure and I just want to invest in tax lien sales. Or I want to invest in trust deed sales. Or I may want to just do REITs. I want to share the risk. And so I want to partner up with a company that knows a lot more than I do and have done it a lot more than I have. And I want to just invest into that strategy and see the returns from there. And then from those returns, I could do something else. You may want to do foreclosures. You may want to do short-term lending for other people that want to invest in real estate. So you have to find out where your sweet spot is. But the basic thing is that yes, real estate can help you minimize your tax exposure, but it has to be structured in such a way based on you, based on your dynamics. Therefore, just setting up the management structure to manage it all could put you into an active position versus a passive position. So that could work for you. So there's multiple things that you should consider. And so when we sit down with you and we begin to look over how you look, a financial snapshot of who you are financially to determine what is your barrier to entry. And then based on that barrier to entry is what is your entry point? How do you embark into the tremendous opportunity of real estate investing? And so that is the key to what I see most of the time. Individuals wanting to do something that someone else is doing, but that may not be for you. You may not get the same results from that activity. I get a lot of physicians call me all the time, Shawn, I don't know whether or not I should buy this property. Shawn, I don't know whether or not I should sell this property. I'm fed up. I don't like the landlord business. I can't find a management company. And if I did have a management company, I lose the tax benefits. There's just so many different things that you must consider when you want to dive into that area. Okay, but one of the big common things is that if you're interested in embarking on strategic tax planning, what that invariably means is that your adjusted gross income is going to go down. So once your adjusted gross income goes down, depending on what your debt to income ratio is, depending on some other factors, you may not be in a position to do a full doc loan. So what happens in that particular case? Yes, you're saving a great deal of money on taxes, but now your adjusted gross income is so low that you can't qualify for that loan. So what happens there? Well, now you're in a different lending area where you may have to do commercial lending, where typically you have to pay a higher interest rate, or typically you might have a higher down payment that you have to pay. Well, in any one of those scenarios, there is a beneficial number that you can figure out to determine whether or not this is going to be a viable thing for me to embark on and what is the benefits I'm going to get, not just in passive income, because we all want passive income, but also, do I get a tax break when I do it? Because that's how we like to show our physicians how to embark into many different financial decisions they make, not just real estate, is, okay, when we make this move based on how we're structured, do I get a benefit now? Well, that benefit now means, do I get a tax deduction now? Do I get to take back some of my hard-earned tax dollars when I make this decision? It doesn't matter how much profit that I want to take down the road from this opportunity. What opportunity, or how does it impact my financial situation as soon as I make the decision? So when you structure yourself in a way where as soon as you make that financial decision, you get a profit, because if you take back some of your tax dollars based on how you did it, then you already made a profit. And so you have to factor in that profit that you've already made and then consider the long-term effects. Now, the long-term effects means that I might get a windfall and I might have a tremendous amount of capital gains, right? So that's going to push my tax liability up again, right? So a lot of times we might be making these decisions, but we don't look at all the variables. And sometimes when you look at all the variables, certain investments that you're very gung-ho about or you're very excited about to do may not be good for you when you look at all the variables. Okay, listen, I make the investment, I get no appreciable tax deduction from the investment. Now I got to hold on to the investment. I got to make additional investments into the investment, right? Now I'm at a tremendous loss, and that loss does nothing against my active income. Well, that's not a good position to be in. Well, yeah, I'm thinking about holding on to it and I'll get the benefit somewhere down the line. Well, when you do strategic planning, you want the benefit now and down the line. Right? You got to fare better when you get the benefit now, and then you're also looking for a greater pasture. But when you look for that greater pasture, meaning that you're going to get capital gains or you're going to get profit from that building that you bought with a group of other physicians, or whether you're going to get a profit from selling it after you fixed it up, or whether you just got to get a profit just by selling it without fixing it up. It doesn't matter. That profit is going to trigger some type of tax liability. So therefore, you factor in that tax liability and develop a strategy or a structure in order to be able to minimize that tax liability before you get into it. Well, I hope you liked the video. I'd like you to stay tuned for my upcoming book called The New Tax Paradigm, where I go into the importance of planning and how to strategize your way to wealth. Also, don't forget to subscribe to the YouTube channel. Talk to you soon. Have a great day.